All right, investors, this is Andreas from Portfolio123, and this is a video about how to build basically a strategy book with predefined ranking systems for Portfolio123. Some of the ranking systems I changed a little bit, but that's also the purpose of the video, to show basically what you can do with predefined ranking systems. I would not start from the scratch. 80% from what I'm using in my trading, in my personal trading, comes from Portfolio123 and the quants from Portfolio123. So basically, the idea is the first idea is to use what's out there and go from there. And the second idea of this video is portfolio books are really, really powerful because they combine different strategies, different edges. You never know basically which, edge, low volatility, momentum, or, multi-ranking or something like forward value is working in a specific year. So I like to mitigate that timing risk of factors basically and put different factor systems in one portfolio book. So basically, let's just go to my account here and go to subscriptions, and if you modify, I'm not going to modify it, but just to see that. So on the portfolio level, let's just say you want to do portfolio monthly. Now we go down. Let's see if the strategy books are in there. Universes, AI factor, imported. Let me just see book strategies, right? So here they are, right? So book strategies are in here on portfolio, and I think that's one of the most underestimated features of the portfolio subscription. Not a lot of people use it, but I would strongly recommend using it. The reason for that, again, is that you can mitigate factor exposure risk. You mix them up and you don't have to time them anymore. All right. So this is the same book. Again, all those strategies are based on ranking systems from Portfolio123 that are predefined. And this is the same book where it just said, okay, I added gold as a diversifier and I added the Russell 2000 short, which is 2 times leverage here. So that would, translate to a 10% short position on the Russell 2000. Why am I doing this? The reason is, first of all, this is a nice scalable curve, but I have to ask myself, am I able to go through a 49% drawdown in 2008? Yes, a little bit less than the max drawdown of the S&P 500, but at the end of the day, that's a lot. So I always ask myself, okay, if I have that book, that's kind of my base, right? Do I want to be hedged a little bit? Do I want to add gold as a diversifier, which is a great diversifier, by the way? And so that's also how financial advisors do it, right? They have a base book and then they have different versions of the book. They might not be able to add a short, but they might add something like short-term treasury bills that don't have a duration risk as a cash, equivalent basically. And now the max drawdown really goes down. Yes, you lose total return, but I think it's important to look into the mirror and ask oneself, okay, what kind of max drawdown can I basically, go through in real time? That's the same book, just with a little bit more of a short. So that would translate basically to a 20% short on the Russell 2000, and again 20% position on the on gold. And here we go. So here are the base strategies. I took core sentiment, which comes out of the box. I don't know if you toggle here, and then you see the Portfolio123 ranking system 64 we have. It comes out of the box, and it's out of the box. It's already a very, very, very strong ranking system, right? And I use it personally extensively. And I basically add to it, in different occasions, I add market cap to it, add something like actuals to it, but I always use that as a base and not start, from the scratch, basically, right? So very nice system, very simple, rank below 80, rebalance every 6 weeks. Current earnings need to be higher than 13 weeks ago. The estimates, basically, that's all what I have as a buy and sell rule. So very robustly designed. It's not optimized. It has 48 stocks in here. So, just a nice base strategy. All right, same strategy just on the S&P 500. Both of those strategies are in this book here, right? Yeah, it works well on the S&P 500 as well. This is core low volatility, and one might say, okay, it's out of sample, or no, it's out of favor. I'm sorry, it's out of favor since 2020. Yes, that's true, but I still would add it to the strategy book. You know, in terms of if I would build an investing strategy book for for my retirement account, I would still let that in here, right? So that's the same strategy as this one, right? Just on the S&P 500, and again, yes, it's out of favor, but I would let it in the strategy book. All right, so here I basically started to combine things. I took core, sentiment, and quality and added it to one ranking system and built basically this portfolio strategy. Again, it's based on Russell 3000, and if you look at the trading system, it's very, very simple. It just sells when the rank goes below 80, and then it rebalances every 6 weeks. All right, same system, just on the S&P 500. Also very nice capital curve. This is forward value. I don't like value. I don't get value very much to work. But static value would be something like price earnings, and I like forward value, something like price earnings next year's growth. And what I took here, I just took small and micro cap focus and nullified some things, right? So this is basically small and micro cap focus ranking system. I took the growth out, but what I let in here is the forward value stuff. So next year's earnings divided by price, stuff like that I let in here. And it works very well on the S&P 500, right? Same system, just on the easy to trade universe, focus value forward. Again, I mean, 24%, that's not too bad, right? Really, really nice system here. Again, on the trading system, I did not do much. Yes, this is a little bit higher in the turnover, and I think this is also weekly. Not sure. No, every 6 weeks. But turnover here is a little bit higher, right? But really nice, nice way to express value. All right, next thing, I took the small and micro cap focus, changed it a little bit. I equal weighted it, added sentiment on the industry level. If you look here, basically, that is on the industry level here, right? And I took small and micro cap focus has market cap, lower market cap pointing down, basically this arrow pointing down. I took that out. So, and everything is equal weighted besides the sentiment part, right? And if you take that, it makes it very, very nice, growthy, kind of growthy because sentiment is highly, highly weighted in it. But it works very well on the S&P 500, right? So it's kind of a multi-ranking, equal weighted. Besides, sentiment is a little bit higher weighted, right? So again, the good thing is I use small and micro cap focus here. Just change it a little bit, save it as this, right? Set focus multi-ranking, and that was it. So I always, again, work with standard components of Portfolio123. Pretty fun stuff. All right, this is estimated versions and surprises. I did that by myself actually, but I was inspired by the core sentiment. So I took a lot of sentiment stuff in here, estimate stuff in here. And again, very nice system on the S&P 500. And here we go. Yeah, that's again the same system on the easy to trade US universe. Very nice. And here we go. This is a small micro cap focus system. It's also in the in that strategy book, basically, right? And it just takes a small micro cap focus, rebalances. I'm not sure. Let me just see when it rebalances every week. And those are the specifications of the strategy. Very nice thing. I would always, if you don't have too much AUM, I would always have a small cap strategy in my strategy book. It's just really nice. It's not in favor every year. and this had a rough summer. Basically, if you look at the 1 year here, so had a rough summer here. That was not too cool, but it's doing well. Small cap value momentum is doing well in a strategy book combined with other edges. All right, so that is it. That's an AI strategy I will do another video about, but that is it. So everything is in that strategy book here. I will provide this link. If you have subscription on the portfolio level of Portfolio123, you will be able to access this. You will be able to save it as a new simulated book. And if you do that, it will basically be in your environment, right? And on the strategy level, you can do the same thing. You can save as simulated strategy. Again, it's public, so it will be accessible for you. And if you do that, it will be in your environment, basically. If you do that, it will be a simulated strategy converted to a live strategy, and then you can build your own book and do the mutations to the strategy. But that is it. So 2 main points. I think that strategy books are very, very important to leverage different edges of the market at the same time, and not, you don't have to basically time those factors, which is very, very hard. And the other thing is you can start to play around with it, add hedges to it, add portfolio diversifiers to it, and basically ask yourself, okay, what kind of drawdown do I want to have, for example, in my retirement account? And the second point of the video is, as you can see, I took standard stuff from Portfolio123. It's just such a big time saver. And again, 80% of my stuff comes from Portfolio123, and I would never, build something like that from scratch. It's done by great quants from Portfolio123, and therefore it's really, really important not to waste time and see what's already out there. All right, thank you very much and have a great day. Thank you.